It's type B. There's a few little things in it that we'll pick up on as we go. But basically with these, work your way from top to bottom. We're doing the balance sheet first, and our final answer will be the sales. So, first of the first, McSharry lodged 1350 into a business account and a business bank account, and on the same day purchased a business for 1325. So he bought the business, or he lodged money into the account, so that's his capital. So in our uh, in our finance by in our capital and reserves, we'll have capital on the first of the first, and that will be the 1350. So that's the amount of private money he's put into the business. We can then work out the goodwill of the business based on the second figure, the 1325. So he paid 1325, and he bought a business with assets and liabilities costing assets of 800,000, equipment 225, stock is an asset of 46,140, and rates prepaid is an asset of 81. Debtors is an asset of 88,320. Creditors a liability, wages due is a liability, and investments is an asset. So if we do that sum, that'll be 1302 360. So the goodwill will be the difference between those two numbers, so 22,640, and that's a intangible fixed asset. 22,640. Now at this point, I generally put stuff in from the bottom because that'll give us an idea about what we have to do as the question goes on. So the stuff at the bottom here is pretty much always current asset or current liability. So it says included in the assets and liabilities of the firm are bank of 1086, which is great because we don't have to work out the bank figure. In some recent questions, you did have to work out the bank. Stock 85 to 122, including stock of oil of 11. So I'm going to split them up just to be safe. 85 122 and 1100. So stock of oil. So we know there's going to be a light and heat working. Debtors can go straight in. 121,500. And wages due as a liability. So we know there'll be some sort of a wages working. 4750. Creditors is a liability. 57.8. And there's electricity due of 240, which is a liability as well. So they're just things we can put in from the start. Okay. Get quite a few marks for that as well, just to get nice easy marks as you tip along. So back up to the top, you've got premises of 800,000. So you just said we're starting from here and we're going to work our way all the way down. So we've got premises of 800,000. Now, more than likely you will have bought a new premises, so go down and check our new building. So on working 3, it says he purchased an adjoining premises costing 180. So you have 800,000 plus 180, so it's 980. All right. And he borrowed money to do it. There's interest. Don't mind any of that. I want to check if there's any depreciation. So down to my depreciation working. He's not depreciating buildings, so we can put in the 980 over there. So second one is equipment. And again, we know equipment is a fixed asset. So that's 225. But again, you need to check in the payments to see if you bought any more. So you bought equipment of 60,000. So 225 plus 60 is 285. I'm assuming we didn't sell any, but we may have. Now again, I know there's depreciation. It's depreciated at the rate of 12.5% from date of purchase to date of sale. So I need to work out what the depreciation for the year is. So I have got 12.5% of the original number, which is up here, the 225, and I got that equipment on, well, I assume I got it on the 1st of the 1st, and I have it. I bought the equipment on the 1st of the 7th, so that's for 6 months. I have that amount, and then I have 12.5% of my new figure, 285, and I've got that for the remaining 6 months. So that is 31,875. So we'll work. That's our expense for the year. There's no accumulated depreciation, so it's the same thing. So we have 31,875 is an expense. And we can work off the basis that it's also in our accumulated depreciation, because there was no mention of assets having depreciation at the start of the year. So that's 253,125. Now, stock 46,140. So that's our opening stock. So we can just put that in here. That could be something you do at the very start of the question. Opening stocks obviously never change. So the next one we see is our rates. So that's going to be our rates working. We have a prepaid of 8.1 at the start of the year. So in effect, we're paying our rates from April to April. So we'll have 3 months prepaid at the start of the year, which means we'll have 3 months prepaid at the end of the year. So we'll take our rates figure in our payments. So rate starts off as rates for 12 months, 27.6. That's for 12 months, which in effect you're going to have paid on the 1st of April. Add your prepaid at the start of the year, because it's paid last year, but to do with this year, the accruals concept. So add that 8.1, and that's 3 months. And if you have a 3 month prepaid at the start of the year, you have to have a 3 month prepaid at the end of the year, which will be an asset, of course. So we're going to take that 27.6. We're going to find 3/12 of it. That's 6.9. And that's going to be taken away from this year's, because it's into next year, so it's not included in this year's figure. So that's 28.8 as our rates. Our rates is an expense. And of course we have to remember to put in our rates prepaid. So it's money that's owed to us, which we just worked out to be 6.9. That's a current asset. Debtors we don't have to do, because debtors ties in with sales, and that's going to be our final answer. Same with creditors, we don't have to do anything with that. And then we've wages due, so that'll be our wages working. So if we look at wages, this is one where normally there's a little bit of work involved. So it says the following payments were made from the business bank account during the year, and it tells us light and heat, and then it says wages and general expenses 165,750, which includes 2,800 for insurance. So we need to take that out, because it's not insurance, obviously it's in wages. So we're going to take out the 2.8. So that's just it's like a movement, so we'll use that later on. The wages due at the start of the year have to be added on, because they're have to be taken away, because they're to do with last year. So we've wages due of 3.2, and then we've wages due at the end of the year, which is 4,750. So just be aware of that. Like a lot of questions, you just have the wages due at the start of the year, but that's why I put in the things at the bottom first, just as I'm on top of that. So you've got 164,500 as our wages. Don't have to do anything when I need the rest of the numbers. Investments 192, so they're a fixed asset. Now it tells us the investments are 1.5%, so that's going to be our investment income. So 1.5% of 192. That's 2,880. So that's going to be an income for us. All right, and we just check then, see if we've lodged any money, because anytime we have investment income, we also have investment income due. So he's lodged 2.4. There's going to be investment income due of 480, which we know is a current asset. Again, that's sort of new, but it's not really new. It's in every single question one we've ever done, and a lot of other questions. So that 480 is a current asset. Sorry, 480, not 840. So that's all the stuff from the top done. So during the year, he doesn't keep a full set of accounts, but estimates that gross profit is 25% of sales. So this is going to be 25% of sales. Whatever answer we get, we can work out sales from. Each week, McSharry took goods to the value of 120 and cash 250. So that'll be my drawings working. So I'm going to start that now. So I've got stock drawings, 120 by 52. And I've got my cash drawings of 250 by 52. So that's that done. The following are lodged. So we've done the investment income and a private inheritance of 290. So that's capital introduced. So anything private is capital. On the 1st of the 7th, he purchased an adjoining premises costing 180. So we've done that. To fund this, the business borrowed 80% of the cost of the premises. So there's a loan of 80% of the cost of the premises, so 80% of 180. So again, that's never been seen before, but it normally gives you the number. But like I'm sure we can work out what 80% of 180 is. So it's 144. So how that's split up, we'll have to wait and see. I'm just going to put it in originally as the 144. We're doing that in pencil and get ready to change it later on. So it's agreed that interest will be charged at the rate of 3% per annum per year. So loan interest, 3% of 144. Now, you got the loan on the 1st of the 7th, so you have it for 6 months. So it's 2160. So now, just for the time being, loan interest is being shown in all marketing schemes now after profit. So I'm not going to put it in as an expense, but I am obviously putting it in. 2160 as an expense, but in its own spot, right? Just be aware of that. Now, anytime there's loan interest due. So that's 2160 minus whatever we've paid. So we've paid 2,000. So there's a loan interest due of 160. So that's an expense. Now, see how he's repaying it. So either by investment or by installment. So the first repayment was due next year, and he's paying it in installments over 10 years, 20 equal installments. So if the loan is 144, the loan installment is going to be 144 divided by 20. So that'll be 7,200. So that's going to be a loan installment due, because it's due within 12 months of us doing the accounts. And then this will be 132. So 144 minus 12,000. Sorry, that's wrong. That's 20 installments over 10 years. So there's 2. That should be divided by 10. So it'll be 14.4. So there's 2 installments due within the next year. So that'll be minus 14.4. So that'll be 129,600. All right, so that's the loan and loan interest done. The following payments were made during the year. So light and heat. So I'll have a working there. So we made a payment for light and heat of 5,460. If we go down to the bottom, we can see that there's a due at the end of the year of 240. And there is stock of oil of 11. So you always take away stocks, closing stocks. So that'll give us a light and heat used of 4.6. There's pretty much always drawings on light and heat. I've sort of haven't skipped the drawings, but I just need to check. What's it say on drawings? 10% in light and heat should be for the private business. So of the 4.6, 460 is going to be drawings, which will give us an expense of 4140. So 460 I'll put into my drawings. I should have. So I need to move this down a bit. It's been so long since I've done one of these. So we'll put our 460. We'll put our expense in of 4140. Wages we've done. Just check there's no drawings in the wages. There isn't. There's only on insurance, cleaning, and light and heat. The delivery van's 56,000. So there is depreciation on delivery vans. So I need to put that in. So delivery van's a fixed asset, and it tells you that you bought the delivery van on. It doesn't say when you bought it, but the depreciation is 20%. So we need to put that in. So the depreciation of vehicles will be 20% of 56,000. Which will be 11.2, which I can put in up here. Okay, rates for 12 months I've done. Loan interest I've done. I've worked out my loan interest due, and my cleaning expenses then 4,000. I know there's drawings on this, so 4,000 is cleaning, and it tells us that there's 25% of that is for the private section, so that's going to be 3,000, and there was no cleaning due. So 1,000 into the drawings and 3,000 into your expenses. Now it tells me the insurance then was 2.8. So I know that was 2.8 because I would have forgotten about it, only it said there's drawings on it. So the insurance is 2.8, of which 30% of that is drawings. There's no insurance due. So that's 840. So the insurance expense will be 1960. So I need to put that 840 into my drawings working. Now, depreciations, drawings are done, depreciations are done. There's a bad debt provision, so I need to set that up. And it tells us that it is 3% of debtors, so it's 3% of the debtors at the end of the year, obviously. So 3% of 1,21500. Now that is 3,645. Now they're setting up a depreciation, so the increase in BDP is gone from 0 to 3,645 as well. So that is an expense 3,645. Now, I should have read the question carefully at the start. Always look out for that BDP in more recent questions. So I need to adjust my debtors because BDP's reduced debtors. So minus 3,645. So 117,855 will be your debtors figure. So I should have everything in, I think. So I'm just going to have the marking scheme open myself on my phone here because obviously these always balance, so you never know if you're going to be right. There's a lot in this. It's a pretty good question to practice. So we're going to add up our fixed assets. And then we're going to find our total fixed assets. So add on your goodwill to your tangible fixed assets to your investments. You get 149,565. We're going to add up our current assets. Hopefully I have them all in. You get get 318,957. Add up your current liabilities. It's 77,350, which will take away, and add your answer back onto your fixed assets. The good news for us is that, looking at the American scheme, I have it right. So that's obviously not financed by. I'm just gonna so what we have to find out is our net profit. So we're just going to throw in our drawings figure. So our drawings figure is 21540. Now that's a minus. So if we do the sum, our capital employed our final answer has to be obviously the same as the value of our total net assets. So our final answer is 1734172. Now, if we just do the sum, so if we take that 1734172, add these numbers together, so 129,600 plus 135 0,000 plus 290 minus 21,450. And we take those answers away from 1734172. That will give us the net profit of the business. Okay, so I'm going to work backwards from it. So we take the 1734172, take away 129,600, take away 135,000, take away 290, and add on the drawings of 21,540. It's the same way of doing it. You get a net profit, and in this case it's a net loss, which would cause carnage, but just trust yourself that it can be a net loss of 13,888. Okay, and that's right. Okay, so that 13,888 becomes our figure over here. So minus 13,888. So some number minus 13,888, or sorry, some number minus 2160 is minus 13,888. So it's so it's 16. That's wrong. Let's see. So it's minus 11,728 minus 2170 is minus 13,888. Remember, you're working up the way, so you're always doing the opposite. So if I add up all my expenses now, my expenses add up to 249,120. Alright, so some number minus 249,120 is equal to minus 11,788. So again, do the opposite. So minus, we'll take the net profit minus 11728, and then add back on the 249,120. That gives you 237,392. And you can check that that's right. 237,392 minus 249,120. That gives you the net loss, or the operating loss of 11,728. All right. Do the opposite then for your gross profit. So you take the 237,392. You need to take away 2,880 because you're adding on investment income. So find the number that you add investment income to. So obviously it has to be less. That gives you your gross profit of 234,512. Now it told us gross profit was 25% of sales. So this number is 25% of sales. So we can find out what sales is by taking that 234,512, dividing it by 25 and multiplying it by 100. And you get 938,048. The closing stock we know is 84,022. So some number, so the cost of sales will be the difference between the sales and the gross profit. So sales minus cost of sales is gross profit. So the gross profit is the difference between those two numbers, 703,536. And that just leaves us with the purchases to find. So 46,140 plus purchases minus 84,022 is 703,536. So if you just work backwards from that, so 703,536 plus 84,022 minus 46,140. So always doing the opposite. That'll give you the purchases of 741,418. I ended up with a 7 there. 36. Sorry. So you need to show what the number is before the drawing. So you add back on the stock drawings. So the stock drawings is $250 a week, which we worked out to be 6240. So we're going to add back on 6240 to that, and we get 747,658, and then show that you're taking away 62240. So you just have to show the drawings there, and that will increase your purchases, and that's it done. Okay, so you won't know if you're right or not, but there's nothing too difficult in that if you just follow it through and be willing to change your numbers as you find things that are new in it. The theory on it then, it says explain two fundamental accounting concepts that reference how they apply to the accounts of McSharry. So the four fundamental accounting concepts are the accruals concepts, the consistency concept, the prudence concept, and the going concern concept. So you have to explain what they are, and then just show how McSharry is that. So is following that maybe. So the accruals concept is that all income earned has to be recorded in the period that it's earned, not the time when the money is received. And the same with expenses. All expenses paid, or all expenses are recorded in the period where they happen, not when the period where they're paid for. So that leads to dues and prepayment. So we can say that, well, there's a load of dues and prepayments in this. So we can say that there's wages that are paid, that will be paid next year, but that fall due in this year's accounts. So they have to appear in this year's accounts. So they're included in the expense, and they're noted in the balance sheet as a wage. The going concern is that you have to assume that the business will exist into the future. We can assume that is true because McSharry has bought new buildings, so we can say the business is going to exist into the future. Consistency is treating things the same from one accounting period to the next. We don't know if that's the case. So the only thing you can say is you would have to look at other years' accounts to be able to see if this has happened. And the prudence concept is you always take due care when preparing for the accounts. You assume that losses will be made, and you include them in your accounts before they're made. But you do not assume that profits will be made, and you do not include them in the accounts until the profits actually happen. So possible losses are recorded in the accounts immediately, but income isn't recorded until it's certain that it arrives. And the best example of the prudence concept is the idea of a bad debt provision. So any business that provides a bad debt provision is assuming that not all of their money will be provided. So you can mention that he creates a bad debt provision of 3645. All right, so I hope that's all right for you lads. We'll see you again.